I think that the institutions were always going to be involved at some point. It was just a matter of time. And here they are. And I think that we're in the beginning stages of a great expansion of Bitcoin understanding. And that's really the key here is once you have enough institutions that are on board, you can change around mainstream media. Don't have the negative articles on Bloomberg and CNBC every single day about Bitcoin. And when you have somebody like Michael Saylor report earnings and say certain things on his call, they don't skew it negatively just for the shock value and to sell stories because they inherently are negatively predisposed to Bitcoin. That will change eventually. It's happening slowly, but I have high confidence in the next 3 to 5 years, it's going to be a completely different story that you see on these channels.
One of the most revealing parts of the discussion centers on Lavish's personal experience while building his Bitcoin-focused hedge fund. Before the recent political shift, he says operating a crypto-related business inside the traditional banking system was extremely difficult. Even though his hedge fund was fully legal, SEC compliant, and structured like a traditional investment firm, major banks treated it with suspicion simply because Bitcoin was involved. Lavish explains that his firm struggled to secure a prime broker, the financial institution responsible for custody, liquidity, settlement, lending, and operational support for hedge funds. Banks such as Wells Fargo, Citigroup, and JP Morgan frequently delayed or rejected transactions linked to Bitcoin businesses. Investors attempting to wire money into the fund faced constant scrutiny. Some transfers were reversed, others were blocked entirely. In some cases, customers were allegedly debanked simply for insisting on sending funds to Bitcoin-related entities. Lavish says the banks themselves did not necessarily believe Bitcoin was a scam. Instead, they were reacting to political and regulatory pressure coming from anti-crypto policymakers.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, the Trump administration has supposedly adopted Bitcoin and cryptocurrencies, and it's gotten pretty messy. They issued their own coins. You have the Trump coin, the Melania coin, and they've got XRP in the offices or in the White House all the time. There's a lot of noise around it, unfortunately. We expected something more than just the Bitcoin reserve that they announced, which was just holding on to the Bitcoin that we have, and maybe holding on to Bitcoin that they seize from illicit or illegal operations. But so that's been a bit of a disappointment to, I would think, to most of the Bitcoin world. It's been a disappointment. Secondly, unfortunately, they've politicized it. And so now you've got half the country who just believes that Bitcoin is a bad thing because now the Trump administration has adopted it. It's for, it's supposedly for pedophiles and drug traffickers and money launderers. And it's just, it's the same stuff that you hear on mainstream media, and it's just gotten louder in pockets. But all that said, the reality is nothing was going to stop Bitcoin, I don't believe. And the administration's adoption of it just kind of paved the way for banks to say, you know what, now we can actually operate with this on our balance sheets, and we can start presenting and offering different services around cryptocurrencies, and specifically Bitcoin and Ethereum and a couple of others. But what's important about it is, Rizzo, when I was raising my hedge fund before this administration came in, we experienced some extraordinary pushback from banks. We had a very hard time getting just quite honestly, getting what we call a prime broker for hedge funds, which is it's your broker who holds all your assets and provides your liquidity and provides your settlement, provides your maybe your margin and all of that. And when you buy and sell things, they're the ones who they basically custody it for you. So it's your custodian, it's your banker, it's your lender, all of that rolled into one at a big level. So it's kind of like having your Fidelity or Schwab account personally for a big hedge fund. Ours isn't that big, but you know what I mean. But we had significant pushback getting, number one, getting a prime broker. Number two, just getting wires from investors into the fund. Even though we're Delaware based, we're, we have all of our stuff filed with the SEC. We're way above board. We're just a traditional hedge fund that operates in the Bitcoin space. We invest in any kind of company that is in the Bitcoin world. It could be early stage, late stage, venture, private, public. It doesn't matter to us. Debt, we've done everything, just like a traditional hedge fund. The only difference is our core focus is on Bitcoin-centric companies. And when they heard Bitcoin, they saw Bitcoin in the name. They meaning big banks, Wells Fargo, Citigroup, JP Morgan, it doesn't matter. All of these big banks were either refusing wires, questioning the wires, holding up the wires, reversing the wires, just saying, no, you can't send money to this. It's a scam. It's got Bitcoin in the name. Why did they do that? Did they really believe it was a scam? No, of course not. What happened was, Rizzo, is back then you had Lizzie Warren and her anti-crypto army out there who were pressuring banks and financial institutions against doing business with any kind of Bitcoin or crypto related companies or funds. And this was called Choke Point 2.0. It was real. We felt it. We experienced it. We had a couple of people debanked because they sent wires and refused to have them brought back. And so they just debanked them. They said, well, we're not going to bank you. This is an echo from Choke Point 1.0, which was under the Obama administration, which was completely, it was in the shadows that they ran this, but it was called Choke Point 1.0. And it was a way they wanted to debank basically any company that was involved in things like alcohol, guns, and specifically pornography. And so they were just trying to debank all of them and say, you do business with them, we're going to, make it very difficult for you as a bank, and we're going to audit you, we're going to give you, sanction you, whatever. The same sort of thing happened in Choke Point 2.0. And they said crypto is the target this time. Anybody who's involved in crypto and Bitcoin, you can't do business with. So that was the big change when the Trump administration came in. The SEC, Gensler stepped down. You have a new chair of the SEC, and other heads of the different agencies that came in under Trump appointees or nominees or whatever. And Choke Point 2.0, basically, it almost overnight didn't go away, but it flipped. And suddenly we were like, oh, okay, so a lot of these banks and companies will do business with us. We actually started getting calls from them and interest from them. And now, flash forward, we're not even 2 years here, and you see JP Morgan, Citigroup, Wells Fargo, like it just named them, the whole list of them. They're all doing business in Bitcoin and falling over each other. And they're now not just offering services, but they're recommending Bitcoin allocations to portfolios. And, it's a complete turnaround. So has it been perfect? No. Has it caused political upheaval and maybe some fighting between the polarized political parties and people who are polarized in each end? Yeah, it has. Does it matter ultimately? No, it doesn't matter. Bitcoin doesn't care. It's not going to matter. It's a good development that these companies are now offering these services and getting involved in Bitcoin. And specifically, we have all these ETFs that have made, they've had record expansions and money poured into them, especially IBIT and FBTC. They've had so much money, and Bitwise, there's so much money being poured into these things. And so, it's ultimately, is it a good thing for Bitcoin? Well, I think it was, you've got two ways of thinking about it. Some people don't want the institutions involved at all. They just think Bitcoin should be completely separate. because now you've got this this second and third layer of financial services on top of it. And but the reality is, I think that the institutions were always going to be involved at some point. It was just a matter of time. And here they are. And I think that we're in the beginning stages of a great expansion of Bitcoin understanding. And that's really the key here, is once you have enough institutions that are on board, you can change around mainstream media. Don't have the negative articles on Bloomberg and CNBC every single day about Bitcoin. And when you have somebody like Michael Saylor report earnings and say certain things on his call, they don't skew it negatively just for the shock value and to sell stories, because they inherently are negatively predisposed to Bitcoin. That will change eventually. It's happening slowly, but I have high confidence in the next 3 to 5 years, it's going to be a completely different story that you see on these channels.
Fast forward to today, and the situation looks completely different. Lavish highlights how major banks are now competing to participate in the Bitcoin economy. Institutions like JP Morgan, Citigroup, and Wells Fargo are no longer simply tolerating Bitcoin. They are actively offering crypto-related services and even recommending Bitcoin allocations to clients. This represents one of the biggest reversals in modern financial history. For years, mainstream financial institutions publicly criticized Bitcoin while privately studying it. Now that political and regulatory barriers are easing, Wall Street is rapidly entering the space. Lavish also points to the explosive success of Bitcoin ETFs, particularly products like iShares Bitcoin Trust, IBIT, Fidelity's FBTC, and offerings from Bitwise. Massive institutional capital is now flowing into these investment vehicles, giving traditional investors easier access to Bitcoin exposure. He acknowledges that some Bitcoin purists dislike institutional involvement. They fear Bitcoin becoming absorbed into the existing financial system through layers of banking products and derivatives. But Lavish believes institutional adoption was inevitable. In his view, this is simply the next stage of Bitcoin's evolution.
Oh, here's the thing. So over 2 years ago, I was up in Washington with a group, Perry Ann's group, that we were up there and talking to the different Perry Ann Boring's group. We were up there talking to the different senators and aides and congressmen and their aides, and trying to just educate them a little bit about cryptocurrencies, about Bitcoin, about the need for them, the use case for them, why they're important. And the one thing I came away with that week was these senators and their aides truly do understand the importance of cryptocurrencies, and specifically, they were talking about the importance of stablecoins. And why would they be so important? Well, the reason is, stablecoins, for people who don't know what those are, they're basically they're a cryptocurrency that are pegged to an underlying asset. And so the stablecoins are basically their asset or currency. And so the most stablecoins are pegged to the US dollar. That's just reality. Again, we talked about the US dollar being the currency, the global reserve currency. That's why. And so when you go onto an exchange, you don't just hold your dollars there. You transfer them into something that's a cryptocurrency. Typically, you'll transfer them into something that's like a stable coin in US dollars, and then it waits. And you some of the platforms can offer a yield on those, but it's a special thing that they agree with, and they have deals with the stablecoin issuer. But here's the important part about it. It's kind of like having a money market, right? Where it gives you either a yield or great flexibility to be trading in all of these pairs in BTC or in ETH or whatever pair you want to have against a US dollar based pair, which would be the stablecoin, Tether or Circle, USDC. But so why is it important to the US government? Because they realize that suddenly lo and behold, out of nowhere, one of the top 10 buyers of the US Treasuries 2 years ago was who? Tether. Why would they be buying US Treasuries? Because they're pegged to the US dollar. So they're buying T-bills and some longer dated paper in order to stay kind of in line with US dollars, because they could sell those T-bills at any moment and get dollars back to them to be able to put into somebody's account who has liquidated the USDT and get them dollars really quickly. It's like you've got to stay pegged to that dollar. To do that, you act like a money market. What do the money markets own? T-bills and treasuries. That's what they own. And so it's the same sort of thing, but in cryptocurrency form. And they caught on to this, and they're like, wow, this is really important. And so the Treasury's like, okay, well, we're running $2 trillion deficits. The Treasury isn't, Congress is, but they have to deal with it. You know, they're basically Congress's banker, and they've got to deal with these deficits, which means they've got to issue more debt. Who's buying it? Well, you're seeing lower demand from foreign buyers for US Treasury for a number of reasons. We've seen decreasing demand for a number of reasons. First, you heard like the absolute idiotic, catastrophic step that we took. I've said this before, when Biden and his administration, when they shut off Russia from the SWIFT network and froze their assets, meaning US Treasuries, it sent the signal to the world that if you don't do what we want, we may just freeze or seize your treasuries. Well, how stupid was that? We need the entire world to be buying our treasuries. You know, we're running at a deficit. And so, bad mistake. So now you see a bunch of countries led by, you know, China and Russia saying, we don't want to be holding these things, because what if the US Treasury just decides to lock them up on us? You know, the Fed decides to not do business with it, kicks us off the SWIFT network. Well, we need to be able to do business cross-border in other currencies, whether it's gold or it's the yuan or it's Bitcoin, you know. And so you're seeing a kind of a decrease there. Now you hear noise that, well, but there's been an increase in foreign buyers. You can see it on the Treasury when they have auctions every day, or, you know, every other day. True, but the biggest foreign buyer is the Cayman Islands. Who's the Cayman Islands? They're US-based hedge funds that have foreign funds. You know, they have offshore vehicles for either foreign investors, meaning, you know, your high net worth investors, or for US investors who don't want the, you know, they don't want the business related income. So they are like endowments or foundations that, or pension funds that don't want to have that onshore tax liability. And so they invest offshore. And so, of course, the US hedge funds are using treasuries. Why do they use treasuries? Why do they buy treasuries? Why are they buying T-bills? Why are they, you know, why? Well, they've got a lot of cash. They don't want to be sitting on it, melting in their accounts, number one. Number two, they use them to lever their balance sheet because they're easy to borrow against. You've got treasuries, you can borrow against them by basically 100%. That's two. Number three is they run the basis trade, where they buy US treasuries and they sell US treasury futures. And there's a little basis you know, spread there that they lever up 20, 30, 50 times, and they make returns on that. And so now back to the point, which is, okay, who's going to buy these treasuries if we have decreasing international demand from central banks and other buyers? Well, who's going to buy these treasuries? Well, everyday person who is on a crypto exchange around the world and it's got a phone can get on there, send in their local currency to buy what? A USDT or a USDC. And they're basically buying treasuries. So finding pockets of capital around the world. They know how important this is, to find as many pockets of capital around the world as they can, where people are going to be getting onto these exchanges, putting in their bolivar or their euros or whatever it is, and getting into a USDT or USDC to have an exchange pair ready to trade these cryptocurrencies. And so they understand that and they get it. And And now you've got the whole fight in Congress, which is going on with the stablecoin bill. And why is it not passed yet? Well, it passed in Congress, sat in the Senate for a while. They had other things going on, but now they've kind of been half focused on it. But it's been a fight. Why is it a fight? Now you get down to first principles. Why would banks be fighting with Congress about this? Because the stablecoin bill is a way for banks to offer stablecoins. Okay, so what's that going to do for a bank though? If they offer stablecoins, well, they're offering a stablecoin that's going to have a yield. They don't want to give that yield to the customer. I mean, at this point, they're able to borrow from the Fed, and then turn around and have they basically they're taking in the deposits from investors, and I know people who have left money, like lots of money, in checking and savings accounts at these banks that are paying them like 0.25%, while interest rates are up over 5% a couple of years ago. They're paying them 0.25% and keeping that split. They're basically saying, well, I can get 5% from putting your money into the reverse repo, but I'm going to give you 0.25%. I'm going to keep the other 4.75. Now what happens with the stable coin? Well, people aren't putting their money in a checking account anymore. They're going to be able to buy a stable coin right there in their Chase account and just sit on a stable coin. They're going to be like, well, why aren't I not getting the 4 or 5% return on the stable coin? And so the banks are what they're arguing for is legislation that prevents them from being able to pass on that yield. They don't want to pass on the yield because it hurts their business. It completely turns their business upside down. They don't want to do that. So that's why this thing keeps stalling in first principles from the bank side. They want to be able to say, well, I'm not allowed to give you the yield, sorry, and that's why they don't want USDT, USDC able to sitting here on these exchanges, turning around and offering yield to customers. They want to be able to offer the JP Morgan, or Chase stablecoin that gives you great flexibility and high stability, and it allows you to get in and out of different things really quickly. But we're not going to be able to offer you yield on those. So that's kind of where we're at in that whole saga. But the U.S. government understands very well that they've got to get these things passed. They've got to get structure around it because they're big pools of money that are sitting there waiting to be poured into the Treasury market, which they just need. They need more and more buyers of the Treasuries. And they want to continue having money coming into these banks to be going into the Treasuries rather than just all over the world anywhere else. So
another major theme in the discussion is media perception. Lavish argues that mainstream financial media has historically treated Bitcoin negatively because institutions themselves were skeptical or hostile toward it. Networks like Bloomberg and CNBC often focused on sensationalism, volatility, and fear-based narratives. But now that major financial players are invested in Bitcoin, Lavish believes the media narrative will gradually change. As more institutions adopt Bitcoin, mainstream coverage becomes harder to frame entirely negatively. Public companies discussing Bitcoin on earnings calls, especially influential figures like Michael Saylor, are helping normalize the asset. Lavish predicts that within 3 to 5 years, Bitcoin coverage on major financial networks will look dramatically different from today.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.